So, as an investor, Andres, how are you changing your strategy? Because I know we talked about it previously in our previous podcast, which was now some time ago. You were looking at high rental yielding properties in some not so well known areas. I think we said back then they were mining adjacent towns. They weren't just mining towns. They were we call it let's call them industrial towns. I don't want to give too much away without people using your service, but
That's it.
how has your strategy now, given obviously what's going on in the first half of this year, how has it changed? What are you looking for your clients? Are you looking at things that have the potential for capital growth? Are you looking at things? Are you building more rental type portfolios? How have you changed things, or have you not changed?
Look, it really depends on where the clients are at because each case is different. But overall, I would say there's a trend towards going more of a balanced portfolio. We've got cash flow coming in, but also the capital growth acts because you don't want to lose out on when the market does shift. So I sourced a property that was high in cash flow, but also in an area that's got a lot of investment going on to counteract that negative. So I'm actually positive at the moment. I'm actually going to be selling one of my units up in Queensland because it's done what it's needed to do. We've pulled equity out of it twice before. We've still got really good equity sitting there, so we're going to pull that out and we're going to buy a freestanding house if I can. So that's the kind of thing that I'm looking at doing myself. Again, today we had a client phone in, brand new to property investments. He's got a little bit of a deposit saved up. He's earning really, really well. We're looking at over 140K a year. He's earning. He's got no dependents. He doesn't own a property, so he's renting. Um, so for him, it would be great to get a fund like a foundation property where you can have more of a balanced portfolio with the cash flow being there as well as the capital growth. So you can actually use that as a stepping stone to get into your next property and then the next one up above from that. I always tell my clients, look, try and find at least for your first 2 or 3 properties, get something that's going to give you cash flow, but also giving you that capital growth because the capital growth in 3 or 4 years time is going to allow you to multiply your property portfolio a lot quicker than if you were just buying cash flow. Cash flow is great. You need the cash flow. But the capital growth is where you actually, make the magic happen.
So,
So
regardless of
yeah,
what's happening in
that's
the market, you're still insisting people look at probably the first 2, 3 properties, balanced properties, a bit of capital growth, a good yield, but not
yes.
not the extremes of either.
No, that's right.